Which is the best stock to buy right now, Rivian or Polestar? I'm going to answer that question in this video, measuring them across several critical metrics, so let's get right into it. First, looking at their price moves in 2022, Rivian stock was down 36.6% and Polestar was down 59.15%. Next, let's look at the revenue growth, not revenue growth, sorry, overall revenue for both Rivian and Polestar. And Polestar had the advantage, and then Rivian has recently ramped it up and took over at revenue of 536 million in its most recent quarter, where Polestar is at 435 million. Of course, both of these companies have robust consumer demand. It's a matter of ramping up production quickly enough to meet that customer demand. The next metric I want to look at is operating income, just to show that both of these companies are losing a lot of money on the bottom line. The more units they produce, the more money they're losing, because they're losing money on each car, and they're still ramping up production. Polestar lost 196 million in its most recent quarter. Rivian lost a whopping 1.8 billion in its most recent quarter. And since they're losing so much money in operating profits, I wanted to look at cash flow from operations. Rivian lost 1.368 billion in cash flow from operations in its most recent quarter. Polestar lost $1 billion in its most recent quarter in cash flow from operations. It's very expensive to ramp up car manufacturing. It's a capital intensive business. That's why if you've been following my channel, I like to say that I'm not a fan of investing in vehicle manufacturing stocks. So since they're losing so much money in cash and operating profit, I want to look at how much money they have. So, what kind of runway they have. And Rivian with a clear advantage here, $13.27 billion in cash and equivalents. Polestar with only 988 million, so it's going to need to raise more cash if it's going to keep burning through $1 billion in cash flow every quarter. This is just one quarter's worth of cash, where Rivian's got 13.3 billion. It's got a long runway ahead. It can continue ramping up manufacturing without running out of money. And of course, it's backed by Amazon, which has ordered up to 100,000 electric delivery vans for its fleet. And so Rivian's got more robust pockets here and more sustainability for long-term manufacturing output growth. So finally, let's look at valuation. And since they're both losing money on the bottom line, they're negative in terms of free cash flow, I chose to use the forward price to sales ratio. And Rivian is more expensive here, trading at 3.2, where Polestar is trading at 2.5. But in my opinion, Rivian deserves the premium valuation over Polestar, mainly because of its big $13 billion cash balance, giving it more runway, more safety in terms of how long it has to ramp up manufacturing to reach profitability, to reach positive cash flow. And it's got that robust backlog of consumer demand. So it's just a matter of getting up that efficient and effective manufacturing output. And with all that money in its bank account already, it's got a big advantage over Polestar, because if you haven't noticed, over the last few months, the Federal Reserve has increased interest rates, and investor appetite for investing in companies that are losing money on the bottom line is diminishing. So if Polestar needs to go to the capital markets to raise cash, it's going to be a lot more expensive than it was 6 months ago, 12 months ago, and 18 months ago. So the fact that Rivian's got that 13 billion is a big advantage here. All right, so there's my answer. Rivian is the better buy between these two. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.